Welcome to the Higher Timeframe Scalper, your go-to destination for mastering the art of trading using ICT, inner circle trader concepts. If you've been feeling overwhelmed by the complexities of the markets or frustrated by inconsistent results, know that you're not alone. Today, we're here to empower you with knowledge and strategies that can transform your trading journey and lead you towards sustainable success. Institutional trading lies at the heart of our approach. It's about understanding the behavior of the big players in the market, the institutions, the smart money. These entities often leave behind subtle clues and patterns in the market, and by learning to decode them, we can position ourselves on the winning side of trades. We delve deep into the intricacies of smart money manipulations, uncovering the tactics and maneuvers they employ to shake out retail traders and accumulate positions at favorable prices. But fear not, for with knowledge comes power. By arming ourselves with insights into these manipulations, we can navigate the markets with confidence and resilience. To those of you who may be feeling disheartened by losses or setbacks, I want to remind you that every trader, no matter how experienced, has faced challenges along the way. It's not about avoiding losses altogether, but about learning from them and emerging stronger. Each trade, each analysis is an opportunity for growth and refinement. So, whether you're just starting out on your trading journey or looking to enhance your skills, know that you're in the right place. Here at the Higher Timeframe Scalper, we're dedicated to providing you with the tools, knowledge, and support you need to thrive in the world of trading. Are you ready to unlock your full potential as a trader? Let's embark on this journey together, where every setback is a stepping stone towards success. A liquidity hunt, often referred to as a stop hunt or liquidity grab, is a strategic move executed to manipulate prices in the financial markets to offset large market participants, such as institutional traders. The primary objective of a liquidity hunt is to trigger a cascade of stop-loss orders or capture liquidity at specific price levels. This is achieved by initiating a movement in the price of an asset, typically in the opposite direction of the prevailing trend. As the price swiftly moves against the trend, traders who have placed stop-loss orders at strategic levels are triggered, leading to an influx of buying or selling activity, depending on the direction of the hunt. The increased trading volume and liquidity created during a liquidity hunt enable the initiating trader to enter or exit positions at more favorable prices. Liquidity hunts are a common occurrence in various financial markets, including Forex, stocks, and commodities, and understanding their mechanics is crucial for traders to protect themselves from potential losses and capitalize on trading opportunities. Here, on the GBP/USD chart, we observe a notable price movement where the price surged upwards, tapping into buy-side liquidity, only to swiftly reverse and shift into a bearish trend, yielding approximately 175 pips in profits in just around 2 days. Now, what instigated this dramatic downturn in the Great British Pound? To unravel this mystery, let's shift our focus to the higher timeframes for deeper insights. Zooming out to the monthly chart, we can clearly discern a critical juncture in price action. The GBP/USD has ascended to a pivotal level marked by a bearish breaker and a bearish fair value gap. Our attention is drawn to the blue arrow pinpointing the precise month when our trade transpired. This strategic alignment on the monthly time frame provides valuable context for understanding the dynamics behind the significant price movement we've witnessed. Transitioning to the weekly chart, we uncover a compelling layer of insight. Nested within the broader context of the monthly bearish fair value gap, we identify a corresponding bearish fair value gap. Additionally, a new order block has materialized, delineated by the conspicuous yellow line. It's worth noting the alignment of these key structures. The blue arrow is pointing at the specific week when our trade unfolded. This convergence of technical elements underscores the significance of our trade decision within the broader framework of market dynamics. Before delving into the daily chart, let's first examine the economic calendar for that pivotal week. Notably, we observe a series of high-impact news events scheduled from Monday through Wednesday. According to ICT, Inner Circle Trader Concepts, it's anticipated that the high or low of the week typically manifests within this time frame. Armed with this understanding, let's proceed to analyze the daily chart, contextualizing our trade within the broader narrative of fundamental drivers and market sentiment. Transitioning to the daily chart, we witness the commencement of a discernible downtrend. Price action unfolds by multiple swing lows and consistently respecting bearish order blocks. Notably, the purple rectangle encapsulates the entirety of the week during which our trade unfolded. However, what's particularly intriguing is the observation preceding the week's commencement, a distinct daily swing high, delineated by the prominent blue line. This precursor sets the stage for the subsequent price action and offers invaluable insights into the market's directional bias leading into the trading week. Examining the 4-hour chart, we discern a pivotal sequence of events. On Tuesday, price action ascended to the daily swing high premium array, effectively establishing the high of the week. Subsequently, a bearish shift ensued, culminating in the formation of a 4-hour bearish fair value gap. As Wednesday unfolded, during the London kill zone, price descended to the 4-hour bearish fair value gap, coinciding with high-impact news during the London session. This catalyzed a further downward displacement, with price targeting a daily swing low. Remarkably, the overall movement from Tuesday's high to Wednesday's low spans approximately 175 pips, translating to a potential profit of $1,750 for every standard lot contract traded. Notably, even if you missed the opportunity on Tuesday, the market provided a second chance to capitalize on Wednesday's developments, exemplifying the dynamic and opportunistic nature of trading. As we wrap up this video, let's reflect on the journey we've embarked upon together. Remember, the path to trading success is often filled with twists, turns, and challenges. But it's these very obstacles that provide us with opportunities to grow, learn, and ultimately, triumph. Always remember that every setback is a setup for a comeback. It's important to reiterate that the information presented here is for educational purposes only and should not be construed as financial advice. Trading carries inherent risks, and it's essential to approach the markets with caution and diligence. Before engaging with real money, consider reaching out to a trusted trade advisor or financial professional. They can provide personalized guidance tailored to your unique circumstances and risk tolerance, helping you make informed decisions and navigate the complexities of the financial markets more effectively. Remember, your success in trading ultimately depends on your willingness to learn, adapt, and persevere. Use the knowledge gained from this video as a stepping stone in your journey towards trading mastery. If you found value in this content and are eager to continue learning, don't hesitate to like, share, and comment below. And for more insights and inspiration on your trading journey, be sure to subscribe to our channel. Thank you for joining us, and may your trading endeavors be both rewarding and fulfilling.